Now, Nvidia's got news out today. It's currently down about 2.6%, trading about 138.60 as we get to the 9 o'clock hour. Here's what it is. China State Administration for Market Regulation is investigating Nvidia over potential breaches of anti-monopoly law. Now, that's a long sentence to talk about something. Everyone's first reaction might be, I didn't even know Nvidia was still selling chips to China. Well, they are. Nvidia gets about 10 to 12%, or about $3.7 billion a year of their revenue from China. So it's not insignificant. It's not a game changer, but this is, remember, just an investigation. It's nothing formal. And what it really might be, if you look at a name like Nvidia, is some type of tit for tat or a negotiation between the United States and China. So this investigation, which could affect Nvidia's ability to sell chips to China, is something that has the stock down, like I said, 2.7%.
An attractive investment opportunity is presented by the artificial intelligence (AI) sector. According to forecasts, the emerging market is expected to increase phenomenally, with worldwide sales expected to reach over $827 billion by 2030 from $184 billion in 2024. The AI explosion has greatly benefited Nvidia. Its remarkable sales growth made it the top semiconductor firm in the world by market capitalization, and its success places it among the best AI stocks to purchase. As of the week ending December 6, Nvidia's stock has increased by about 190% in 2024. Given the astounding rise, it would appear that there is no longer a chance to purchase shares. But this is untrue. Here are several reasons why Nvidia is still a fantastic stock to buy if you want to get exposure to the AI business. Nvidia's dominance in cutting-edge semiconductor processors for artificial intelligence is one element that makes it a desirable investment. According to some estimates, it holds an 80% market share in the industry. The company started this by introducing its graphics processing unit, GPU, in 1999, which was a pioneer in accelerated computing. With accelerated computing, the CPU handles other computer operations, while GPUs handle data-intensive activities, such those needed by AI systems. With the advent of artificial intelligence, accelerated computing gained popularity, particularly in the cloud computing industry, where AI systems are frequently housed in data centers. Alongside it, the demand for Nvidia's GPUs skyrocketed. The company's data center sales thus hit a record $30.8 billion in its fiscal third quarter, which concluded on October 27. This represents a startling 112% year-over-year gain. As a result, overall Q3 sales increased 94% from the previous year to a record $35.1 billion. The other element that makes Nvidia a top AI stock is the company's financial success, which is influenced by its enormous sales growth. Net income increased by 109% year-over-year to $19.3 billion thanks to record Q3 sales. As a result, its diluted profits per share, EPS, increased 111% from the previous year to $0.78 in the third quarter. Actually, since the demand for AI exploded in 2023, Nvidia's EPS has been on a rocket ship. Furthermore, the business had an impressive balance sheet at the end of the third quarter. Assets totaled $96 billion, while total liabilities were only $30 billion. This included $38.5 billion in cash, cash equivalents, and marketable securities. Will Nvidia's remarkable performance continue? It has a number of advantages. The company leads the GPU market, and governments and companies worldwide are implementing its products to enhance their AI capabilities. For instance, Japan, Taiwan, and Denmark employ the company's GPUs in their AI supercomputers. Numerous AI solutions are also available from Nvidia. Blackwell, its new computational architecture, was created especially with AI in mind. According to Nvidia, each Blackwell GPU has more than 200 billion transistors, making it the most powerful processor in the world. Colette Kress, the business's chief financial officer, stated that because of the high level of consumer demand for Blackwell, the company is expected to surpass its prior Blackwell revenue projection of several $billions. In addition to its GPU capabilities, the company offers AI software like its Nvidia NVDA suite of tools that make it easier to create generative AI solutions. NIM has been implemented by numerous businesses, such as Broadcom and ServiceNow. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
It's a tradable event, and as if you're watching Nvidia on a daily basis, you have to make adjustments and adjust your strikes, and that's what we'll do. So we'll look at Nvidia, like I said, trading about 138 and change, and we'll go look at something in the diagonal family. So our practice paper money trade that we're looking at today in Nvidia goes out to the January 3rd expiration, buying the 140 call, nice round number, 140, and then going to the December 13th, so this Friday, selling the 145 call. Obviously, what you're looking to do here is buy the dip in Nvidia, get long deltas just in case Nvidia were to recover, because sometimes when you see a news item like this, which seems odd in its timing and its topic, and you have to be careful, but it's a tradable event, and you're looking for some type of recovery today, or maybe tomorrow morning and later in the week. Do we know that? No, of course we don't. That's why we trade risk-defined on these trades. So,
another of Nvidia's main advantages is this hardware and software integration, which further connects users to the company's AI ecosystem. Lastly, since technology increasingly relies on AI, CEO Jensen Huang stated that he thinks the AI era is bringing about a new industrial revolution, in which data centers will become AI factories. This indicates that the market for cloud computing, which is expected to grow to $2.3 trillion by 2032, will need GPUs as it rapidly shifts to an accelerated computing architecture. If he is correct, as he was with faster computing, Nvidia will have a bright future as the market leader for AI processors if it can capitalize on this enormous market. However, what about the remarkable increases in Nvidia's stock this year? Is it therefore overpriced? That question can be addressed by contrasting the company's price-to-earnings ratio, P/E, a commonly used indicator to evaluate stock valuation, with that of other semiconductor companies. Investors' willingness to pay for a dollar's worth of earnings is indicated by the P/E ratio. As the graph illustrates, Nvidia's P/E multiple is significantly lower than that of other well-known semiconductor companies, suggesting that its stock is still reasonably priced. Nvidia is well positioned for years of success ahead thanks to its current exceptional financial performance, the success of products like Blackwell, and the long-term expansion of the AI sector. Nvidia is still a terrific investment to take advantage of the secular trend of artificial intelligence because of its reasonable valuation, even with this year's stock price gains. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
no, of course we don't. That's why we trade risk-defined on these trades. So going in, buying the January 3rd 140, selling December 13th 145. The current, we have it in about $4.30 debit. It's trading about 440 right now, so the stock is already firmed up. It's already off its lows of 137.42. So the risk on this trade, the debit paid $4.30. You're looking for a move back through 40 and up towards the strike of $45. That's where you see the peak on that trade right there. You're collecting theta. You've got enough weeks on this out till the January 3rd. You've got 25 days on the long option. Why is that important? Because short long a 25-day, short a 4-day allows you to possibly, if you don't get the move you're looking for, extend duration on that trade and keep extending duration, lowering the cutting off the duration of that trade. So lowering the net debit and meanwhile lowering the break even on that trade. Okay, so a diagonal spread in Nvidia.
As of today, Nvidia has achieved another astounding year-to-date gain of 180%, building on its incredible 2023 performance. Nvidia's profits are still impressive, and further growth is anticipated in 2025. But some investors might be worried about Nvidia's value, its slowing growth pace, or the competition stealing market share and reducing Nvidia's profit margins. Nvidia-related exchange-traded funds, ETFs, are great ways to gain exposure to the business while preserving diversification. Many of the more than 85 ETFs offered by investment management company Vanguard contain Nvidia shares. To help you decide if any of the 7 Vanguard ETFs with the highest exposure to Nvidia are a suitable fit for you, here is a quick summary of each one. After Apple, Nvidia is currently the second most valuable company in the world. Because of its scale, Nvidia now accounts for a significant amount of the S&P 500. An investor who invests $1,000 in an S&P 500 index fund is actually purchasing around $70 worth of Nvidia stock and $930 worth of other market shares. At just 0.03% or $0.30 for every $1,000 invested, the Vanguard S&P 500 ETF boasts the lowest expense ratio of any Vanguard ETF and a 6.8% allocation in Nvidia. Even greater exposure to Nvidia can be found in 6 Vanguard ETFs. The performance of the tech industry is reflected in the Vanguard Information Technology ETF. It is understandable that Nvidia accounts for such a significant portion of this ETF, given that it is a tech stock. Actually, a whopping 44.5% of the ETF is made up of Apple, Nvidia, and Microsoft combined. There are many advantages to the other ETFs on our list that might make them even better investments, even though some investors might simply grab the Vanguard Information Technology ETF to increase their exposure to Nvidia. The Vanguard Information Technology ETF's largest disadvantage is that it excludes businesses outside of the technology industry. Amazon and Tesla, for instance, are in the consumer discretionary industry. The communications industry includes companies like Netflix, Alphabet, and Meta platforms. If you want a high level of exposure to Nvidia and other mega-cap growth firms, the Vanguard Mega-Cap Growth ETF is a superior investment than the Vanguard Information Technology ETF. Just 10 stocks account for 65.5% of the fund's assets. Because the fund is essentially boom or bust depending on a small number of names, the concentration is a double-edged sword. It can still be worthwhile to purchase now, though, provided you have the fortitude to withstand volatility and believe in the long-term growth of today's leading companies. All of the main growth stocks are included in the other ETFs on this list because they are not sector-based. The fund's concentration in the biggest names and diversification are the main distinctions between them. With more holdings and more diversification, the Vanguard Mega Cap Growth ETF and the Vanguard S&P 500 Growth ETF are fairly comparable. The top 10 holdings account for 61.8% of its allocation. Because it filters growth firms from the Russell 1000 index rather of the S&P 500, the Vanguard Russell 1000 Growth ETF contains even more holdings. With only 10 equities accounting for 61.2% of the portfolio, it is still very much focused on its biggest holdings. The Vanguard Growth ETF has a 59% weighting in its top holdings and a cost ratio that is almost as low as the Vanguard S&P 500 ETF. Investors who want to invest in the biggest firms rather than merely growth equities could find the Vanguard Mega Cap ETF appealing. The fund has more exposure to Nvidia than the Vanguard S&P 500 ETF, despite holding other well-known blue-chip firms such as ExxonMobil, United Health Group, JP Morgan Chase, and Berkshire Hathaway. Investing in businesses such as Nvidia while preserving diversification can be accomplished via low-cost exchange-traded funds, ETFs. It's important to keep in mind, though, that funds with significant holdings in related industries may be erratic. For instance, Nvidia's primary clients include numerous significant cloud computing firms. Nvidia's operations will most likely be impacted if they have a slump, and several of the top growth stocks may drop at the same time. However, if you want to increase your exposure to Nvidia without committing a significant portion of your portfolio, the ETFs that have been highlighted can be excellent options. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.